All right, so let's dive into something that's probably on a lot of people's minds, right? Building a secure financial future.
Absolutely. It's a common goal.
We're talking about indexed universal life insurance, or IULs, as you might have heard them called. You've been looking into ways to, make your money work harder, and IULs keep popping up.
Yeah, they're definitely having a moment.
They're often presented as a way to grow wealth, maybe have a little more control over your money. And our guide for today is this book. It's called Top 25 Ways an IUL Can Secure Your Financial Future and Build a Tax-Free Family Bank.
Catchy title.
I know, right? Who wouldn't want a tax-free family bank?
That's the dream. And it highlights something. Key IOLs are designed to be more than just your average life insurance policy. They're often seen as a more versatile financial tool.
So let's unpack that a bit. In a nutshell, how would you explain what an IUL actually is?
Sure. In the simplest terms, an IUL combines life insurance with a cash value component, and this cash value has the potential to grow over time. What makes it different is that growth is linked to the performance of a specific market index.
Okay, so it's like your money is sort of following the market.
In a way, yes. But it's important to understand your money isn't directly invested in the market like it would be with, say, stocks. Instead, the growth of your cash value within the IUL is influenced by the performance of a chosen index, like, for example, the S&P 500 is a common one.
So not picking individual stocks, but more about trying to capture the overall upward movement of the market.
Exactly.
Okay, that makes sense. But I'm curious, with the market, obviously, there are ups and downs. So how does that work with an IUL?
That's where the cap rate and downside protection come into play, which can be a little confusing. Think of the cap rate as a ceiling on your potential gains, at least during a specific period. So even if the market goes way up, your gains are capped at a certain level.
So even if it's a boom year, I might not see those huge returns.
Right. You trade some potential upside for the security of knowing your money is somewhat protected from those big losses.
A trade-off for sure.
Yeah, it's about finding that balance between growth potential and protection, which is a big part of the appeal for a lot of people, especially as they get closer to retirement.
And speaking of retirement, one thing this book really emphasizes is the tax advantages of IULs. Honestly, it almost sounds too good to be true. Are there really significant tax benefits with these policies?
Well, there are some potential tax advantages, and they are a big part of what makes IULs attractive.
Like what? Give me an example.
One of the most significant is the tax-deferred growth of the cash value.
Tax defer, what does that mean again? Refresh my memory.
Basically, it means you don't pay taxes on the growth of your cash value while it's accumulating within the policy. Those taxes aren't due until you withdraw the money.
Okay. And I could see how that would be appealing, especially if you're in a high tax bracket now and expect to be in a lower one in retirement. But what about when you do want to access that money, say, in retirement?
That's where it gets even more interesting. The book suggests that you might be able to access those funds in retirement through policy loans, which, if structured correctly, could potentially be tax-free.
Wait, hold on. Tax-free withdrawals in retirement. That's like the holy grail, isn't it?
Yeah.
Especially compared to traditional retirement accounts where you're often facing taxes on those withdrawals.
Right. It can be a big advantage.
How does that even work?
Well, when you take out a loan from your IUL, you're essentially borrowing from yourself using your cash value as collateral.
Interesting.
And because the cash value within your IUL has the potential to grow tax-deferred, the interest you pay on your loan can contribute to that growth, potentially compounding over time. It's like this whole internal ecosystem for your money.
That's a really cool concept, being your own banker in a way.
Precisely.
But it also sounds like it requires some careful planning, right?
Yeah.
You really need to understand how these policies work to make the most of them.
Absolutely. You hit the nail on the head. While IULs offer a lot of flexibility, they are not a magic solution, and there are certainly factors to consider, like fees, potential risks, and the importance of professional guidance.
Let's talk about those fees for a second. What kind of fees are we talking about here, and how do they impact the overall performance of an IUL policy?
That's a crucial question. You always want to understand the costs involved with any financial product.
Right. There's no such thing as a free lunch, as they say.
Exactly. IULs, like most financial products, do come with fees. These can include administrative costs, mortality charges, which is essentially the cost of the life insurance coverage itself, and then expenses related to managing the cash value account. The specifics of those fees can vary depending on the insurance company and the specific policy you choose.
So it's not as simple as just looking at the potential returns. You have to factor in those fees to get a realistic picture
Yeah,
of the net growth, right?
you got it. It's all about looking at the bigger picture.
And understanding those nuances.
Exactly. A reputable financial advisor can really help you break down those fees and explain how they might impact your returns over the long run.
Okay, that makes sense. And what about those caps on returns we talked about before? How do those play into this whole picture?
Right, so remember, with an IUL, your cash value growth is linked to the performance of a market index, but it's not a direct investment. To manage risk, insurance companies will often set a cap or a ceiling on how much your cash value can grow in a given period. So even if the market has a stellar year and exceeds expectations, your growth is capped.
Ah, okay. So it's like a trade-off then. You're potentially giving up some of that high-flying upside in exchange for the downside protection and the other benefits the IUL offers.
You got it. It's about finding that balance between growth and security, which is a big part of what makes IULs appealing for a certain type of investor.
And understanding your own risk tolerance, right?
Absolutely. If you're someone who's comfortable with more risk in pursuit of those potentially higher returns, an IUL might not be the ideal fit. But if you prioritize stability and those tax advantages, and you're looking for a long-term strategy for building wealth and generating potentially tax-advantaged income in retirement, then an IUL might be something to explore further.
It sounds like a lot to consider for sure. And that brings us to another piece of the puzzle that I think is important to mention, the death benefit. Because we've been so focused on the living benefits of IULs, like building that cash value, accessing funds, it's easy to forget that there's still a life insurance component to this.
That's a really important point and one that often gets overlooked in these conversations. While the potential for cash value growth and those tax advantages are certainly significant draws, at its core, an IUL is still a life insurance policy. And that's a crucial aspect that often gets overlooked in these conversations. While the potential for cash value growth and tax advantages are significant draws, it's important to remember that at its core, an IUL is still a life insurance policy.
Right. It's easy to get caught up in the excitement of potential investment gains and forget about that fundamental aspect.
Exactly. It's like a two-for-one deal, in a way. You get the death benefit protection for your loved ones, and you have the potential to grow your wealth over time.
It's like having a safety net that can also potentially grow your savings at the same time.
Yeah,
That's a pretty powerful combination, especially if you're looking for long-term financial security.
absolutely. It's about having options and flexibility in how you approach your financial goals. And that ties into the concept of legacy planning that we touched on earlier. The death benefit from an IUL can provide financial security for your beneficiaries when you're gone, helping to cover expenses, pay off debts, or even fund future goals like education.
That peace of mind, knowing that your loved ones will be taken care of financially, is invaluable for a lot of people,
Yeah.
especially if they have young children or dependents who rely on their income.
Absolutely. It's about ensuring that your loved ones are protected no matter what the future holds.
Okay, so we've covered the life insurance aspect, which is obviously a huge part of the IUL equation. But let's circle back to retirement for a moment. You mentioned earlier that IULs can play a role in creating a more diversified retirement income strategy. How does that work exactly?
Yeah.
Right. So imagine this. You're nearing retirement and you're looking at your various income sources like your 401k, maybe some Social Security benefits. With an IUL, you potentially have access to another income stream, and this one might be more tax efficient.
More tax efficient. How so?
Well, because you can borrow against the cash value you've built up within your IUL, and those policy loans, if structured correctly, might not be taxed as heavily as traditional withdrawals from your other retirement accounts. It's like having an extra source of income that the IRS doesn't have as much of a claim on.
That's a really appealing prospect for a lot of retirees, especially those who are worried about outliving their savings or facing a hefty tax bill in their golden years.
It's all about creating a holistic retirement plan that addresses your specific needs and goals. And while IULs can be a valuable tool in that plan, it's important to remember that they're not a magic bullet. Like any financial product, they come with complexities, and it's crucial to seek professional guidance.
Absolutely. And while this deep dive has been incredibly insightful, I think it's clear that IULs are not something you just jump into without doing your homework, right? They're complex, with a lot of moving parts, and what works for one person might not be suitable for another.
I couldn't agree more. Understanding your own financial situation, your goals, and your risk tolerance is paramount. And working with a qualified financial advisor who specializes in IULs is absolutely crucial They can help you assess your options, explain the fine print, and determine if an IUL aligns with your overall financial strategy.
So for anyone listening who's intrigued by the potential of IULs but feeling a little overwhelmed by all the information, what's the one key takeaway you'd want them to remember?
I'd say at the end of the day, knowledge is power. The more you understand about any financial product, the better equipped you'll be to make informed decisions, right? And that's especially true for something like an IUL, which has its complexities. Don't be afraid to ask those questions, do your own research, maybe talk to a few different financial professionals.
It's your financial future, so you want to be sure you're making the right call for your situation.
Absolutely.
Well, I think that's a perfect note to wrap things up on. We've reached the end of our deep dive into the world of IULs, Index Universal Life Insurance. We covered a lot of ground. The basics of how they work, the potential benefits, some of the things to watch out for. I feel like I learned a ton, and hopefully our listeners did too.
It's been a pleasure exploring these ideas with you. I always enjoy these deep dives.
Likewise. And for our listeners, if you're ready to take that next step, see if an IUL is a good fit for you. Remember, Helen Hou is standing by. She's a financial advisor, insurance specialist, ready to answer any questions you might have and guide you through the process. You can reach her at 408-909-5865.
Until next time, stay curious and happy investing.